morning, everyone. I'm Casey Healey, Director at Century 21, and today I've got Nick Ball back in the office joining me for our finance update. Thanks for coming in.
Thanks for having me, Casey.
Today we thought we'd touch back on just the basics of lending and what you're seeing in the market. It's been a pretty crazy year, so
absolutely.
I thought we'd go back to basics and see what are the current rates available in the market. What are we seeing?
I think that's probably one of the most common conversation points over the past few weeks. Obviously, we've seen a big downward shift in rates again this year. We've now got fixed rates starting with a 1 for owner-occupied loans, which is pretty crazy.
Amazing, isn't it?
A few people called it earlier in the year, but we didn't expect it to happen. It's long term, so it's those 4 and 5 year rates, which we've never really seen be the leading rates before. So it's a sign that the low rates are here to stay for a fairly long time from the bank's perspective, which is good. So, and it's giving, those sort of rates are giving families and people surety around their budget for an extended period of time. What that 4 to 5 year period looks like from a cost base, it gives you a lot more security. And the same thing on the investor front. It's crazy, some of the rates that are starting to come in for investors, particularly again the fixed rates. It seems to be what banks are going hardest at. It doesn't suit everyone, a fixed rate, but we're seeing fixed rates for investors in the mid 2s, which is pretty crazy considering where we were 3 years ago, 2 years ago. So it's rental income definitely haven't gone down like that.
No, they're definitely on the rise, especially because of low stock levels, high tenant inquiry levels. So
hopefully we're seeing that the profit gap hopefully increase for landlords, and those costs going down, like the interest cost, is a good sign.
Definitely, considering that's their biggest expense cost.
Yeah, absolutely.
So in relation to approvals and in the market, are you seeing more first home buyers, owner occupiers, investors?
Really swung in about throughout the year. First home buyers have easily been the most dominant buyer in the market, mainly because the government's obviously supported
got those
them.
Rebates.
There's just been so much in their favour. Starting to change, a lot of upsizes. So a lot of families now seeing these rates going, okay, now's the time to go. They're worried that the market's starting to hit a boom. So they're wanting to get into those suburbs that they want to spend the next 10, 15 years in now before it's $200,000-$300,000 more next year. That's the fear in the market. And obviously we've got a bit of a supply and demand thing, so we don't know what next year holds. But I think a lot of people are feeling that things are going to continue to go. So they're definitely active, and investors are starting to come back in now, which is, they've probably been a little bit more quiet given the COVID,
the uncertainty,
tenancy, all that stuff. But as you know, it's not hard to get a tenant at the moment. So
not at all. Average days on market are at record lows, stock levels at record lows. Most of the last 3 months we've started a 0% vacancy rate, so definitely a good time to buy.
So I think people are starting to think about that again. And then obviously another thing of driving market is that their valuations are going up potentially on their owner occupied or their other investors. So they've got equity now
that they can use to play with.
To think about, and do something with that. So they're definitely, and I expect them to come back in a lot harder next year.
Approval times at the moment, we know they're a little extended. What's happening there?
Yeah, look, the banks have been struggling throughout the year, and most of them are saying that they're probably not going to improve until March at least next year.
Wow.
This November-December period is historically one of the worst times. Obviously, a lot of people want to get a lot of stuff done before Christmas.
Yeah, it's like, I need it done before Christmas.
I want to be in there, So it is mayhem at the moment, and I guess the worst thing is that probably the banks that have the better offers are the ones that are slower because people are going there.
With that.
So you've got to balance out what you're looking to achieve. Obviously, most people want to get the best deal, and it's just about understanding that there could be a longer wait time. Whereas if you're just looking to get in the market really fast and there's still options out there that are quick, they may just not be the absolute sharpest. My biggest encouragement point for people is just to do the planning. If you're thinking about getting into the market, you've got to get in on the front foot. It's not like it was 12 plus months ago where we could turn stuff around within a week easily. We can do that, but you're obviously narrowing yourself down to a choice of lenders.
So you've got to have that pre-approval before you really start looking these days, and be really open with your agent when you are purchasing about timeframes. A lot of people using that finance clause.
Absolutely. That's probably leading to the next point, is the pre-approval piece. It is definitely the longest, so banks are, particularly at this time of year, prioritising purchases and refinances to a certain degree. Pre-approvals will be put on a back burner. So you see different timeframes for purchase applications versus pre-approvals. So it's just another thing to be mindful of. So obviously whenever there's a date that someone's got to meet, that's always going to be the one that's brought forward.
Definitely. And is COVID still affecting lending?
Yeah, absolutely. So obviously people that are PAYG, got jobs, that's teetered off. We've seen JobKeeper, all that sort of thing. Pretty much, I haven't seen a JobKeeper payslip for a while. I think that's starting to teeter off, particularly throughout the Hunter. But the self-employed policies with relation to COVID are still pretty strict. Basically what banks are looking to see is that, particularly now, as we get towards the end of the year, they're looking at first quarter BAS for this financial year to make sure that it's in line or greater than the first quarter of last year, just to make sure the business is still healthy. Now, that can be hard for some seasonal businesses. It's about explaining it, but
that
a lot
was
different.
Definitely the peak of COVID was in that first quarter. So
it's very different to a couple of years ago where you just provide your tax returns and tick, 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 whereas now it's a little bit more
under
investigation.
So that's what's happening in the mortgage market and what's happening with approvals. If you've got any questions, please don't hesitate to reach out to Nick. He's always happy to take your call. I'm Casey Healey, Director at Central 21. This is Nick from Inovayt. We look forward to helping you secure financial freedom through property. Thank you.